Let's look at the actual data. If you are anywhere near the age of 40 or 55, you have probably spent years building up your investment portfolio. You did everything right, followed the rules, and saved your hard-earned money. But as you get closer to the day you actually want to use that money to pay your bills and live your life, traditional financial planners hand you a highly dangerous strategy. They tell you to follow the standard 4% rule. This rule says you should sell off 4% of your total stock holdings every single year to fund your personal lifestyle. But here is the brutal structural flaw nobody wants to tell you. This strategy completely falls apart during a market crash. If the stock market drops by 30% and you are forced to sell your shares at an absolute discount just to pay your rent, you are permanently destroying your core compounding engine. Your portfolio base shrinks so fast that it can never recover when the market finally bounces back. If you want true financial freedom without checking the stock market every single morning, you must drop this broken playbook and master the withdrawal law. Let's look at the hidden architecture that lets you extract cash safely. To build an automatic cash extraction machine, you must stop liquidating your baseline shares and shift your focus entirely toward organic distribution layers. A real financial machine does not rely on asset sales to generate liquidity. Instead, it utilizes specialized high-grade corporate infrastructure assets, cash flow healthy dividend kings, and asset-backed distribution networks that are legally required to pass their net earnings straight down to shareholders. These organic payout engines operate completely independent of stock market price changes. The price of a stock on a computer screen can drop by 20% tomorrow due to random market panic, but the actual underlying business, like an energy pipeline, a food utility, or a high-yield covered call volatility framework, continues to collect cash from real-world operations. By structuring your capital directly into these cash-producing layers, your portfolio pumps out a steady stream of spendable liquidity every single month, allowing you to completely bypass standard index constraints. Let's break down the exact mathematical setup to execute this system without triggering unnecessary tax penalties. Most retail investors make the massive mistake of chasing the highest yields they can find on the internet, which usually leads them straight into principal decay traps. To keep your baseline wealth completely safe while maximizing your monthly income velocity, we deploy a highly efficient 50-50 income split model. You allocate 50% of your capital into high-quality dividend growth engines that focus on raising their cash payouts year after year. The remaining 50% goes directly into specialized premium volatility capture funds. This specific layer thrives on market turbulence, converting high market movements into immediate elevated monthly checks. Because these payouts are classified as qualified distributions and option premiums, they pass through optimized tax channels, leaving more net spendable income inside your pocket. This blended framework generates a highly stable 7% net yield on your total capital, completely replacing the need to ever sell a single share of stock. The final secret to keeping this organic withdrawal machine running for decades is our semester rebalancing rule, executed exactly twice a year. When the market is in a massive bull run and your growth shares swell past their target allocation, you don't just sit there. You systematically sweep those excess paper profits and instantly roll them into your premium income layers to increase your baseline monthly paycheck. Review the institutional risk disclosure on screen and in the description box before making any active financial moves. If you are ready to stop destroying your principal wealth and start extracting safe, automated cash flow that hits your account every single month, hit that subscribe button right now. Stay disciplined, protect your capital baseline, and always track the data.